May pips be upon you, and I hope you caught some great percentages today with this gold trade. If you missed it, I'm going to break it down for you. Let me break it down for you now. All right. What I left you with was on the 12 hour, we see that price formed a bearish order block. Price went up to retest this order block like it's supposed to. All right. And then gave us this big old doji and stuff. Do you see the opportunity here? What did I tell you I was looking for? I said I was looking for price to return to impulse, right? Well, if you can't see it, I'm going to help you see it today. Let me break it down for you. All right. I'm going to remove that candle. All right. And we're going to break it down. When price makes this bearish order block, you're going to expect one of two things. If there's a wick here, sometimes price will come back and test just the wick on the opposite side of the candle. That is filling this fair value gap, this liquidity gap. What I mean is there's an imbalance here. Price moved inefficiently. It's all sell orders here. Price will come back and fill that gap, that liquidity gap, to mitigate the buy to sell moves or the sell to buy moves that price makes in order to gain liquidity. It's a whole different subject in regards to price flow and order flow. Excuse me. So but that's one possibility. The other possibility is price is going to go up and test this order block. Come all up in here. This is the base candle. It'll probably go to about half to around the halfway mark of this institutional candle, your IC candle. Okay, that's what you're going to look for. Now, let's go down to the lower time frames, and you'll see the price action much more clearly. Let's go to the 4 hour. All right, on the 4 hour, what do we see? All right, price. You got to train your eye to see what price is doing here. All right. And I want you to pay close attention to what time it is. Right now, this is 9 o'clock. All right. Yesterday. All right. Uh, uh, what you want is to see what you want to see is when does price move? All right. Near or at the open of the US session, the New York session, the NYSE open, that's where you want to make your best moves. You want to make your best trades is when volume comes in. All right, and gives you that push to your TP. All right, now let's go down. What we can see is price made this wick here, and we know this is part of that that bearish engulfer, right? Remember I used the MTF candles indicator. Okay, this is showing the 12-hour candles superimposed over the lower time frame, right? You can see it, see the outline of this bearish, bullish, bearish uh, uh, CP pattern, this doggone order block, this bearish order block. You can see it there. You can see it even clearer as we go down further. All right. And what did I say? I underlined where this the base candle of this bearish bullish bearish order block is, because I'm looking for price to go up there and test it. And what I said was, if price, as long as price doesn't pass the high of it, doesn't break that high, we can still look for sells on this retest. Once it breaks the high, then the price has shifted from a bearish momentum to a bullish momentum. I hope you understand that. I tried to go into detail in that last video. All right, so we have price. We know it's a bearish engulfer on the outside, a 12-hour bearish engulfer, and we're looking for price to go up here and test this doggone test the order block, and we don't want it to pass the high, right? Let's go down further. All right. What you want to see is price make it up there into a candle to go up into this order block, right? Now look, watch this. Watch this. Price is heading up there, just like we hoped. It's going up for the test. Will it stop here? Will it stop midway on the IC candle, this candle here? Or will it go up and test the top? We don't know yet. We just have to be patient. Price is still dilly-dallying. It's coming down. Looks like it's going bearish, but we see wicks of rejection, just like this one. Looks like there might be exhaustion in that bearish uh, uh, momentum. Is price going to come up there or not? Well, it looks like it's going in the other direction until what time is it? 3 o'clock in the morning. This is the European Open, the London. This is the London Open, and if you play the London Open, this is a good trade to take on a lower time frame. You'll see signs of reversal here, and you would take this. You could take this for some nice pips on the 5 minute, on the 1 minute. You can get a lot of good points on the gold with gold. Excuse me. All right. So, but what I'm looking for is sells, and what we're looking for is price to go up and test this order block, and it's almost where we need. Yeah, actually, it's exactly where we needed to be. All right. Once it hits this line, this is where you go down to the very low time frames and look for what you're looking for now. At this point, as soon as price hits your zone, you're looking for signs of exhaustion and then signs of reversal. You're looking for that reversal pattern. All right. Signs of exhaustion are wick rejections and small doji candles. And then we'll look for signs of reversal. Okay. So prices giving us a bearish looking formation there. So this is what we want to see. We want to see bearish formations as a reaction to the bearish order block. We want to see bearish order blocks on a smaller time frame as price contacts the bearish the larger bearish order blocks. Do you understand? So that we can see that price is protecting this price point. All right, that's what an order block is designed to do, to protect that price point. And if we see bearish order blocks on smaller time frames within the larger bearish order block, that's a good sign that we still have bearish momentum and price will go into your direction. Got it? All right. So price goes up a little higher. Look at that. We are up here. Now look, price is respecting this 15-minute order block here. All right. We're going to lighten this one up so that we can see. All right. And all right. I think this was an hour order block. All right. And we are refining it now. Look, this is a 15-minute order block, and price did what? Formed another order block. This is what you want to see. This is the signs of reversal, signs that price is protecting that order block, that price point. All right. So at this point, what do I want to see? The same rules apply. You already know what I want to see. I want to see price retest this order block that's just been formed. Right? This is going to be my entry. That's all I need to see. We got two order blocks protecting this price point, and this one is lower than that one. What do I want to see? I want to see a sign, an indication of reversal. Head and shoulders or Quasimodo What do they both highlight? A shoulder, a head, and another shoulder. All right. Usually, this is where I'll enter because this is usually responding to a an order block here. Even if it doesn't even get up that high, if it's one of these numbers, right? It's down here. It's responding to an order block in this down leg. And I'm looking for that order block. As soon as it makes that dip down, I'm waiting for it to come back up here to test this order block. And that's where I'll take my entry. Got it? Giving you all the sauce I can. All right. So what am I going to do now? I'm waiting for price to give me my entry. All right. And I want to go down a little further. I'm going to the 5 minute. Do I need to go to a 5 minute? All right. We got respect to that one, respect. And you can see on the 5 minute that that order block was tested. Tested. There was a bearish order block here, already tested. It came up, tested, and we're shooting down now. This is all I need. All right. Now I should have seen this. I went ahead a little too fast. I should have came down on the 5 minute so that you can see this test. But that's fine because it's probably going to test again. It happens frequently. But this is a great entry. And why? Because you're going to get a great risk to reward. You're going to put your stop loss above the order block in which you entered, right? And this one, 342 pips. It's nothing. Okay? Nothing. Very snipery. All right? That's a snipery. Now, if you want to be more daring, you could put it here. Why would you put it there? Why would you feel safe? Because it's already been demonstrated that this price point is going to be protected. Okay? And this one protected the new price point that it created. And you see wicks of rejection there. But if you want to be safe, put it above the this order block as opposed to this one. But I always put it above the order block in which I entered. That's what I do. You want to be safe? You can. Still a sniper entry. And what am I going to pick for my exits? Okay, my TPs. Go to the 15. Take a look at the structure. All right, and I'm going to target down here. Now, why did I stop here? Why didn't I go to the order block? This one went to the order block. I always go to the close of the candles if there's just wicks here. If there's just wicks, like this 12-hour wick here, I'm going to the close because I know it made it that far. This one, this is a rejection zone. For me, you see it in this one too, this wick here. This is a doji, 12-hour doji candle. It wicked up good. I like this. I like the closes. If there's just wicks down here, I like the closes better. So this will be TP3. This will be a TP. All right. You see how the wick came here and then the close here as well? That'll be a TP. All right. Here's another TP right here. Okay. So I got 3 TPs. And that'll be good. All right. I'm going to the 30-minute. I want to check that. Yeah, I like that right here, right there. Yeah. Okay. Yeah. All right. This the first one will get me about halfway. And look at the risk to reward. Look at the risk to reward. It's pretty good at 377. Again, I like to put it above the order block in which I entered so I can get that 541. You know what I'm saying? Get that 541. All right. And we'll see how it goes, right? Let's do some candles. It fell right away. Fell right away. That's what you want to see. Wow. I want you to note something. What time is it? This candle came at 7:30. This candle is the one I want you to take a good look at. This is the 8 o'clock candle. This is the open, the New York session open. All right, some people call it the US session. Okay, this is the New York session open. This is the one where you expect the volume to come. London pushed it to this level, which is the high of yesterday. You see these blue lines? Those are day separators. All right, this was yesterday's high. You see the respect given yesterday's high. You know, if price comes up here, either it's going to respect yesterday's high and come back down to the low, or if it breaks this high, you look for it to retest and go higher. Okay, didn't do that this time. We respected the order block, and now we're in profit and we're on our way down. Price did return back to the doggone impulse. All right, the order block that sent price down to break these lows, but we're looking for price to protect these the price point up here again, and that's exactly what it does. So you gotta just hold tight, hold what you got, and let price do its thing. All right, this is the 9:30 New York City Stock Exchange open candle, and we're looking for price to continue to the downside, and it does, and we are TP. Boom, and look at that wick. Look at that wick. It equaled that wick. It equaled these wicks, but we caught it at the close. Got it? Because this will go back on you. Let me continue it. Let me see if it comes back down. All right. We did return the entry again. That's where you have to have nerves of steel to hold. And that's it. So I hope you understand how to catch these trades. I set you up with it early. I guess it was early yesterday. All right, I set you up with that trade. All right, I came with the update for the Dixie, the USD, and how it was going to weaken, and that it's going to allow the USD pairs to surge up and stuff. I was like, it's not gonna go like it did yesterday, where GU was going down and whatever. Remember what I said that? That's in that video. Go check it out. Anyway, I hope you got something out of this. And if you have any questions, leave me a comment. And if you like what I did, leave a like. The likes are important for this algorithm. Thank you very much. I will talk to you in the next video.